You know, every single time you send money overseas, you're actually stepping onto a hidden battlefield. It's a massive fight between a 50-year-old titan that moves information about your money and a disruptive mood challenger that wants to move the money itself. Now, this isn't just about banks talking to each other, it's about the entire future of how value moves around the planet. So let's break down exactly what's at stake here.
And this quote, this really gets to the heart of what we're exploring today. It's from a software developer, Vincent Van Code. See, he's not just saying, hey, Swift has a new competitor. No, he's making a much bolder claim. He's basically saying their whole game plan is flawed, that the only way for the old guard to survive is not to fight the new tech, but to embrace it. It completely changes the conversation from competition to collaboration.
All right, so here's our game plan. First up, we're going to look at how this giant finally woke up. Then, we'll dig into the challenger's sharp critique of that move. After that, we'll simplify the core tech difference with a really easy mail versus money analogy. Then, we'll explore the huge strategic dilemma this whole situation creates. And finally, we'll wrap it all up with a much-needed reality check for anyone investing in or watching this space.
Okay, so let's kick things off with the big guy in the room. The piece of news that really sparked this whole debate is that Swift, the undisputed king of international bank messaging, is finally making a serious move into the world of blockchain.
I mean, for almost half a century, if a bank in New York wanted to talk to a bank in Tokyo, Swift was the way. It's like a private, super secure internet just for banks. So when an institution that's this baked into the system says it's getting into blockchain, yeah, that's not just news. That's a potential earthquake for global finance.
And believe me, their goals are huge. And just look at the words they're using here. Modernize, interoperability, which is just a fancy way of saying getting different systems to talk to each other, and instant. These are the exact promises of the crypto world. With over 40 global banks signing on for this project, Swift is making it clear it wants to play on the challenger's turf. But the real question is, can it?
Okay, so that brings us to the other side of the coin, the counter-argument. I mean, just because a giant takes a step, does that really mean it's moving in the right direction, or even fast enough? Well, a lot of industry observers have some serious doubts.
And this really is the core of the critique from people like Vincent Van Code. The argument is that what Swift is doing isn't really a revolutionary upgrade. It's kind of like they're putting a fancy new spoiler and a shiny coat of paint on a car with an engine from the 1970s. The problem, they say, isn't the ledger. It's the ancient financial architecture it's built on top of. Okay, this is the part you really need to get. Swift, at its core, was built to send information about money. It was never designed to move the actual value itself. It basically sends a memo saying, hey, the money's on its way, but it doesn't actually provide the high-speed train to carry that money. This is the fundamental weakness that just adding a new ledger might not fix.
And because of that fundamental design flaw, all the old headaches are still there. The system is still tangled up in this messy web of different currency markets and pools of money sitting in different banks. It's exactly like dropping a Ferrari engine into a rusty old car that's stuck driving on cobblestone streets. The engine is powerful, but the infrastructure just can't handle it.
So, to really nail this down and make it super simple, let's use an analogy: the difference between sending mail and sending money. This really gets to the core of why these two systems are worlds apart. And this slide lays it out perfectly. On one side, you've got Swift, the messaging network. It's all about coordinating between a bunch of middlemen. On the other side, you've got Ripple, a liquidity network. It was built from day one to get rid of those middlemen and move the actual value directly.
Okay, so think about it like this. Let's say you want to send $100 to a friend overseas. Using the Swift system is like sending a certified letter. That letter has to go through a bunch of different post offices, right? These are like the correspondent banks, and each one has to process it before passing it along. Eventually, your friend gets the letter telling them the money is approved and on its way, but they don't actually have the cash. Now, Ripple is totally different. It's designed to be the digital version of you just handing that cash directly to your friend. It doesn't send the message about the $100, it moves a digital representation of the $100 across its network. The transaction settles in seconds, not days. The message is the money. They arrive together, instantly. In this special power, it has a name. It's called on-demand liquidity. This is Ripple's killer feature. It means banks don't have to park huge piles of cash and accounts all over the world just in case they need it, which is just a fancy way of saying they have tons of money just sitting around, not doing anything. Instead, they can get the cash they need exactly when they need it. It's a huge deal for cutting costs and speeding things up. So, this all leads to a really fascinating dilemma for a legacy giant like Swift. If there's this big technological gap, how do you compete? How on earth do you close the gap between where you want to be and where you actually are?
You know, this is the classic innovator's dilemma we read about in business school, playing out in real time on a massive global scale. Do you try to rebuild your entire business from the inside, or do you find a partner who's already cracked the code? And really, they've got two clear choices. Path 1, go it alone. This is the we can do it ourselves path. It's all about pride, but man, is it slow, incredibly expensive, and super risky. Path 2 is to partner up. Collaborate with a company like Ripple, use the tech that already exists, and get results fast. This is the practical choice. It's choosing pragmatism over pride.
And that right there brings us full circle, back to that quote from the beginning. The argument is that for Swift, collaboration isn't just a good idea. It might be the only way for them to truly modernize and stay in the game. Just imagine combining Swift's incredible network of thousands of banks with Ripple's settlement tech. I mean, that could be an absolute game changer for the entire financial world.
Okay, so after all this talk about corporate strategy and high-stakes drama, what does any of this actually mean for you? For someone just watching this space? Let's bring this all down to earth with a serious reality check.
So here are the key things you absolutely need to keep in mind. First, turning a massive ship like Swift around is incredibly slow and messy. Don't expect miracles overnight. Second, just because a partnership makes sense on paper doesn't mean it'll happen. Corporate ego is a real and powerful thing. Third, and this is a big one, superior technology doesn't always win. And finally, you have to see this as a marathon, not a sprint. This story is going to play out over years, not months.
And look, I have to be crystal clear about this. None of what I've said is financial advice. This is just for education, to help you understand what's going on. The world of digital assets is incredibly unpredictable and risky, so you have to do your own deep dive research before ever making an investment decision.
So that leaves us with the big question. It's the central conflict of our time happening right now in the financial system's hidden plumbing. Is the future of finance going to be won by the biggest player on the board, the one with the history and the network? Or will it be won by the most agile, the one with the slickest, fastest technology? The answer to that is going to define how our money moves for generations.